joined now by Gaura Sengupta, Chief Economist at IDFC First. Gaura, very good morning to you and thank you so much for joining us. How are you looking at this updation to 2023 as the base year? Will we see any real difference in the actual figure? And do you think this is a more comprehensive look at how to look at India's GDP?
Definitely, there will be some impact in terms of growth rates. The last time when we had a revision, when we had it revised, the base was changed to FY12. There was an 8.8 percentage point increase in the average growth rate historically. We do expect that the new GDP, there will be maybe some marginal upward revision in the growth rates of the history based on the new series. But there are definitely methodological improvements. For example, they are trying to address the deflator issue, the fact that mostly 60% of the GDP uses WPI to deflate. So that tends to overstate the real GDP growth numbers. So they're trying to address that by reducing the dependence on WPI. They're also expanding the coverage. They're using new sources of information like GST, which will help, let's say, state level GDP capture to be improved. Even informal sector, for example, unincorporated enterprises, which are within households. Now you will have on a direct basis annual estimate of the value added by that sector, which is again a big change. So yes, we do expect there will be change in level terms as well as in the growth rate due to the GDP series revision.
Okay, are you adjusting your own expectations or will you have to wait? Or obviously, you'll have to wait for the data to come through. But is there likelihood of an adjustment of overall expectations in FY27?
There will be. So we'll have to wait. So we have done our forecast on old base. It's very difficult to say, before the statistics comes out, whether there'll be an upward or a downward revision. Because on one side, if they address the deflator issue, that basically means that the deflator growth rate in the new base year series should be higher, which implies that real GDP growth rate should be depressed. But at the same time, because they are adding, let's say, GST, which will help them capture the formal sector much better. They are adding it, and that should enhance the growth rate of the GDP. So net, it's difficult to say, but we do still expect there will be a marginal upward revision because of the new sources of information. For example, even the informal sector will get captured better. You will have the consumption side. The other big change is consumption earlier used to be imputed. It was not captured directly via data. Now, some part of, let's say, household consumption will get captured by using data such as Vahan, GST, even railway freight movements, etc.
I think it's important. Thank you so much for that, Gaura.